This is London with Bitcoin Spike. We're going to dig into the details on Bitcoin. We have a good move today. I brought you something. And guys, this is London with Bitcoin Spike, former hedge fund owner, private, non-SEC, not financial advice. Let's go through the details. We're a day trading group. You guys know that. Welcome to our VIP. We're the #1 trade group. We had some of the largest, if not a few of the largest trades last year during the bull run. Huge trades. Congratulations to the VIP. We're going to talk about the pattern formation we went over yesterday. Today's about attitude. We're going to talk about attitude. I want to bring, guys, the proper framework for you to go through your day trading, okay? People don't recognize what it takes to trade. I deal with a lot of traders. I want to bring that to you today, that we focus on attitude. What's the appropriate attitude, the level of resiliency that you need in the market? It's not a cakewalk. It's not a primrose path. When we talk about hitting a trade, when you talk about the level of psychological, I'd say, always say challenging that you're going to go through, the psychological challenge that you're going to go through, we are excited to bring you the details in terms of what it's going to take for you to achieve what you want to achieve in the market. Now, in terms of that, how would I know? Well, I'll tell you. And who do we have here? Venus. Hey, Venus, what's going on? Venus, nice to see you. Speaking of resiliency, Venus, #1 contributor, just top trader in VIP. You guys go ahead and shout out in the chats. Would love to talk with you individually on the phone soon. But as we look at resiliency, as we look at fortitude, we're going to talk about probabilities a touch in terms of the framework that we're going to go through tonight. I'm excited about this this stream particularly, and I'll tell you guys, I hope that the specific microphone is okay with the background music. If it's not, we'll be changing things up a bit. Let me know if we're okay, if we're not. Now, resiliency. We're going to talk about what most people look at the market as, okay? And I have a second point of this stream that I want to communicate. Definitely want to communicate to you all. If someone could grab the link and throw it in the back DM VIP, that would be great. If you guys could do that for me, I'd appreciate it, please. So everyone in the back gets the link. I'm not sure the notifications are firing with YouTube. Now, most people think of the following, guys. I want to put this forth in terms of your trade approach. Now, we can go through the technicals very quickly. First of all, we had a great move in the back without a doubt, guys. We nailed this move. It was difficult not to nail, I'll say, at least in terms of the pattern identification. Let's look at the specifics, and we can talk about a few contradictory issues in terms of when you feel like you're splitting something down the middle. We've been in that situation frequently. Recently, you have a 50% probability of going one direction versus the other direction. How do you continue to operate successfully? And this is a big deal, guys. How do you continue to operate successfully when you're challenged with a 50% decision here and a 50% decision right thereafter? Very important, not discussed frequently. When you're looking at something, you'll say, well, the majority of the time in your trades, pay attention, guys. The majority of the time in your trades, you'll say you're looking for something that's favorably bullish or favorably bearish, right, to long or short. We're going to talk about some of the strategies as well today to best cope or deal with that challenge that you encounter. And you guys know that's a big issue in trading. You know that, okay? You're going to run into, and we always want to deal with the probabilities. We have probability sheets. You know that we also deal with, guys, I'm going to go through like New York Institute of Finance, right here, front and center, right? Cycles. We go through cyclical price action, strategies, approaches that are used by Wall Street. Bottom line, when you look at the New York Institute of Finance, you can be assured those materials are used by Wall Street professionals. Bottom line, we're not claiming to be such. We don't want to be such. We want to be day traders. That's it. We don't want to run a finance division, investment banking, or a trade desk for either from Citadel, guys. We don't want to. I don't want to. From Citadel to BlackRock. I don't want to be there. I want to be here with you. Bottom line, former hedge fund owner, private, non-SEC, not financial advice. And when I say former hedge fund owner, there's a good story to that, guys. In terms of working with some of the best or hiring at least the best from Wall Street. Yeah, for my hedge fund. Yeah, let's go with you. Absolutely. In terms of hiring the best, I've got experience being around the best. People may say, well, London, where's your hedge fund? What happened? I have an incredible story about that, guys. I have a wonderful story about being disappointed, me personally being disappointed about even the best from Wall Street. I'm going to tell you, the number one trader from Wall Street, literally me looking at returns, literally me looking at and dealing with the number one trader from Wall Street, guys, off a bond desk. He literally broke the records in terms of the bonus structures available for the traders. He literally hit it so far out of the park. The guy, okay, in terms that I put down on the desk said, let's do this, okay? Big deal when I talk about my hedge fund, etc., because you would say, well, what happened to your hedge fund? Me, personally, I was disappointed with the number one trader, guys, from Wall Street. So, such is life as we continue to grow. As I'm talking about the proper mentalities, I'm talking about how to manage your expectations, how to get through in the proper attitude to have in the market. Understand, I have been challenged by the markets as well. And I haven't talked about that very frequently, but I want you guys to know, like, what is the story? Well, the story is, yeah, hedge fund and me sitting there looking at the number one trader saying, yep, I'm just not happy. Okay, so in terms of that, the market's going to throw you challenges as you develop. And I know you would, if you look into the returns, you would be like, come on, London, you weren't happy with that. But yeah, I've learned and I've developed throughout the years. I have had super aggressive expectations in the past, just like you have had. I have been challenged with this same framework, and I'm going to go through this, guys. After we look at for instance, this flat top resistance ascending line of support, but some important stuff that we're going through today. I want you guys to really capture this, right? Look at the flat top resistance ascending line of support. I'm going to go through the technical diagnostics that I'm bringing to you when I send you specific patterns. We will go through that, okay? And I do want this to be, I don't want to say like a lesson, but a good stream that we'll talk about challenges in the market. What's the proper attitude to bring to the equation, right? What do you need to win in the market? And I bring up this issue with my hedge fund, okay, prior hedge fund owner, okay, private, not SEC, not financial advice. I always say that. But yes, me being challenged with my own expectations in the market. And in terms of that, looking at a 300 plus percent annualized return on investment and being like, it's just not enough. Even with large amounts of money, it's just not enough. Wanting more than 300% IRR per year. So that aggressive nature, those aggressive returns that you go after, even looking at some of the best guys in Wall Street or beyond that are trading at that level or above or below 300% per year, you are challenged the same way. I know this, guys. You want all of your money to multiply more quickly. That's how you see yourself really growing. That's how you project your future. So in terms of the proper attitude to bring into the market, I want to lay that as a foundation, my own experience in the market. I want to bring to you some additional information. We're going to talk about the expectation on this specific move for Bitcoin to return to the prior flat top resistance, right? We have a probability there with. I just shared that with the VIP. Any technicals we go over, I always share it with our VIP first, without a doubt. You guys know that. I really try and do that, guys, at each and every corner in the, I'd say in the road here. I always try and do that, is share the specific probabilities with you in the back so that you have it to reference even in our discussion. And in terms of this, like the throwback occurrence, you guys have the probability sheet in the back right now. If you're new to the channel and you're just kind of, checking out and seeing what's going on here, guys, we trade, we day trade. We've had a lot of success. We're very happy with the members of our group, and we are building in 2022 and beyond. We're literally structurally building herein with the right technology to bring you the most impressive, guys, in terms of the screen layouts in the back so we don't miss anything. From the audio to the technical to the visuals, we're working on that in 2022 and 2023. I'm going to say we're going to take it by storm, guys. We're looking forward to that. But looking at the percentage probability of a throwback to prior resistance, flat top resistance, we know we're at 64%. 64% probability that we would throw back to the flat top resistance. Now, as you trade, guys, and I just want to cover the technicals while we're covering the main, I'd say the main thrust of this stream, okay? The thrust of this stream being, what is the attitude that you need to have? Now, the attitude becomes more difficult, right? The proper attitude becomes more difficult, and I lay the foundation with, guys, things that have challenged me in the market. Absolutely, and it's always the first, the first hook, line, and sinker that the market can get you with is, let's find someone else who wants to multiply their money by 10. I'm going to tell you guys, understand from an exchange or a market perspective, imagine just finding the groups of people that just want to multiply their money by 10. Perfect. Bring them and their accounts to, you would think, huh? With the exchanges, with their programming, with how they're classifying you, how they're looking at you, and how they're detailing you psychologically, guys. You present a psychological profile on your trade program. Without a doubt, you fall into categories as being risk averse, as being, let's say, responsible or irresponsible in your trade approach, right? And what are they going to do with someone who appears to be overly aggressive, right, prone to risk and irresponsible? What do you think they're going to do to someone who falls into that category? Yeah, they're going to just, they want to take that next trade right from you, right? When you want to go large, boom, they want to take that from you. So part of it is this conditioning that we need to condition ourselves, bring into the foray, into the mix, in terms of a bit of a more, I'd say, reasonably geared expectation. Not this 10x, I want to 10x all of my money. That'll get you, guys. It may get you to a 2x or a 3x, all right? But where does it get you after that? You really have to be careful there, okay? Because you can say, I want to 10x my money, all of my money. You may get to 2 or 3x. What's the problem after the 2 or 3x? That's the part in the growth cycle that you may encounter some difficulties with. I speak, guys, from the experience of dealing with a lot of traders, seeing a lot of different things, okay? So in terms of, and I've traded, guys, you guys know that, we've traded heavily. In terms of the details, as we would look at the proper attitude to bring to trading, some of it, I'd say a large portion, is that foundational work, right? That foundation that you want to bring into the markets to, guys, not want to shoot to the moon. Not everything has to be a 10x. I have to 10x or 100x my position. You have to be reasonable to start off with. But I want to bring to you guys tonight, and this is something very important. We'll talk about compounding your risk. I want to talk about that here in a little bit. Compounding your risk, right? Compounding your risk would essentially be the following. When you're looking at the best example that I have here, and there's one great example I'll bring to you guys. I want to let's go through this. Let's go through this analogy, through this example. I think you guys will learn something here. I want to present you with a hypothetical. I'm going to give you the opportunity to trade something which has a 1,000 to 1 probability of succeeding in your favor. All right, it's 1,000 to 1 that it's going to succeed in your favor. All right. There are 2 schools of thought if I were to do that. And let's say it's a critical trade. Let's say it's a great trade and it's really going to pay well. There are 2 schools of thought. There's one school of thought of the guy who wants to build his account. Pay attention, guys. The guy who wants to build his account into that 100x position, or that I want to multiply all my money by 10. Now, listen, if the odds are in your favor 1,000 to 1, you have 2 decisions. You have a decision to either take the trade and say, yes, I'm going to take this trade, and look at my odds, they're 1,000 to 1. Yes, all right? Boom, you book your trade. Beautiful. The other option that you have is, ooh, this trade is 1,000 to 1. I want to trade this trade every morning, every afternoon, and every night, right? I want to trade this trade as many times as I can until I get to the position that I've multiplied all my money, right? All my money by 10 or by 100, right? So what happens is that those two, there's one real disciplined framework there that you look at. This is a big deal, guys. Pay attention to this. And we'll work this into a balanced approach with VIP. But I've met big players before. Pay attention, guys. This is some valuable information. I've met big players before who have sat down in a chair next to me. Big players, guys, okay? Bottom line, truth. Big players, okay? International level, big players, traders, okay? And they have found the 1,000 to 1 trade, okay? They have found the 1,000 to 1 trade, and they've sat next to me and they have said, guys, all but literally directly, well, that's why I'm going to keep trading it. Okay. Now, the problem is the risk associated with that trade was the type and level of risk that they couldn't, I'm going to say this, that it was dangerous for them to continue to repeat the trade, even at the 1,000 to 1, right? The odds of getting hit on that one, let's say that one time it would go against them, the amount of risk involved was too much, even that you wouldn't want to have repeated that trade, even with 1,000 to 1 odds in your favor. You only wanted to hit that trade one time, okay? So as you're looking at your odds, your probabilities, because we do this all the time, I say all the time, we want that 70 to 80% probability, right? What you don't want is to increase your risk profile as you're trading, because we have had beautiful, guys, results on a lot of different, let's say, patterns as we look at the different patterns, a lot of the patterns have very high probabilities associated with them. But if you are increasing your risk exposure, let's say on a broadening wedge formation, that is the strongest pattern in a bear market, guys. It just is. Do the research, and again, guys, let me know if you disagree after reading through the materials. But what we don't want to do is engage in 1,000 to 1 trade in our favor and just repeat it. Increase our exposure, no problem, and blindly ignore the fact that as we continue to engage in that trade, we are cutting into that 1,000 to 1 beautiful level of probability, which is perfectly working in our favor if we participate once, right? So I use that because I've interacted with some very important, very high level, very guys. If I tell you, I'm not going to mention names, but very high level individuals who have taken that bait and want to continue to trade that 1,000 to 1 trade that's in their favor with risk associated therewith, which is just heavy risk. Now, as you balance that, it was too heavy is the problem. As I started to do the figures quickly, and I sat there next to this individual, he's a man, guy. He's a heavy-handed guy. He's internationally, in terms of trading, he's a big guy, okay? But as I sat there, it settled with me as like, this is the kind of trade you need to trade one time, right? It's 1,000 to 1, just trade it once. Go home, relax, do it, just go home and relax, right? But as you look at that, there's a different psychology at work. It's the guy who says, yeah, I just need to trade that one time. The odds are 1,000 to 1 in my favor, I'm just gonna trade it once. And you have the option here, pay attention, you have the option of saying, well, if I continue to trade it at 1,000 to 1, let's say, probability in my favor, that's beautiful, but I'm going to still account for that one time that it goes against me. You have got to account for that one time it's going to go against you, particularly the more that you trade, right? If it's 1,000 to 1, great in terms of probability, go for it. But you've got to account for that one time it's going to go against you. If not, guys, and I explained to this individual, a big heavy-handed trader, guys, big, I'm not going to mention the name, guys, I'm not going to do it, okay, at all, period, off the record, period. But what I'll say is, as I talked with this individual, big trader, okay, you're not gonna find much bigger, guys, okay, period. In terms of who it is, you're not gonna find much bigger, all right? Not talking about a number 1 recruit out of Yale or Harvard and wow, he did really well. I'm talking about you're not gonna find much bigger around, okay, period, all right, in terms of who it was, that's it. But as I settled back within my own, like, self, listening to and talking to this individual, and I know the individual, okay, saying that it was like 1,000 to 1 odds and that it was going to be repeated by the individual and the risk level associated with it, I immediately backed down from it. You guys know I'm the heavy cash reserve individual. I'm that more conservative, work with the cyclical ranges, preserve your cash position, and never overexpose yourself. So to me, it was very natural to pull back even at 1,000 to 1. And that was, for the record, that was the win rate on the trade that was being traded was 1,000 to 1. We get excited about a 70 to 80%. You guys know that. We get excited about 70 to 80%. I'm talking about 1,000 to 1. Okay, that's the level of trader that I was next to. Okay? And that is my friend that I know. Okay, period. Bottom line. Won't mention names again. But as we look at that 1,000 to 1 probability of the trade, those trades exist. We get excited, and I tell you, we want to operate in that 75 to 85% zone. Absolutely. But I'm the type of trader, immediately I will go back into and fall back into heavy cash reserves, limiting risk exposure. So I bring that up to you in terms of that special, beautiful trade that you might find, that 1,000 to 1. I got 1,000 to 1 odds is in my favor, or it could be 100 to 1 odds is in my favor, right? Maybe it's 70 or 80%, and you're excited about those 70 to 80% trades that keep delivering and doing well. I just want to encourage you, you need a risk mitigation program. you need, guys. And in terms of this, you read New York Institute of Finance. Tell me if it doesn't work. Tell me, guys, if we do this 100 rounds, I see it working, guys. I see it work all the time. People who have a cash position and do decide, I'm going to start with not more than 1%. Once you get your consistency down in the market, not more than 1%, right? Not more than 1%. I know it says 5%, say New York Institute of Finance, but I've seen it be very successful. People just start and say maybe 0.5%. 0.5% of an investment account can grow an investment account. You guys, I see it. All right, and I'm not controlling it. I'm not financial advising and doing things. I see traders who have that level of discipline and are able to suffer a loss, still grow an account. It's a beautiful thing. So I want to encourage you in terms of your seeking that moonshot, right? Seeking that 10x, 100x of your whole account. I'm going to encourage you that you can do it with limited cash exposure, guys. I'm just telling you, you can do it with limited cash exposure on each trade. The key is the consistency and the dynamic that you present. We're talking about attitude today. The dynamic that you present to an exchange. Guys, if you have $1 million account and you've got a trader in $1 million account trading $4,000 and $5,000 trades, just imagine how that looks to an exchange who's going to sit there. And this guy's consistently booking $4,000 and $5,000 trades out of $1 million account. You're not even on the radar. You are nowhere on the radar with that. Like, this guy knows what he's doing. Imagine that. Now we would trade differently, right? We might do things differently. I would be surprised if you would just get a flat out agreement just on $1 million account. But it would depend, right? It would depend your level of exposure on what. We'll go through the technicals here in a moment, guys. But this is all relevant. We have a flat top resistance, ascending line of support. We have an expectation of a return to the flat top resistance, don't we? So what's the answer, right? Well, we have a 62% chance that we're going to go back and hit this level, this flat top resistance. That's after looking at like 150,000, guys, 150,000 patterns. These specific probabilities that we discuss are based on over 150,000 patterns. That's a lot, guys. I looked it up and I compared it to something. I was like, what would be cool? What should I bring this to the attention of the group, the BIP? And I looked it up, and I studied Intel, guys. I always say I'm not formally affiliated with any department, agency, bureau, nor military division, domestic or abroad. But I studied at the master's level. I was a mentor, okay, in terms of intelligence, strategic military intelligence, okay? So I like Intel. I just do. That's one of my side hobbies. I enjoy it. Now, in terms of that, though, I looked up, and it's actually, there are more chart patterns studied in Bulkowski and in the Encyclopedia of Chart Patterns. More patterns are studied than there are actually physical books in the CIA library, okay? Just to put it in some context, okay? There's a lot of empirical data that we say there's a 62% chance right now of us returning to the flat top resistance, ascending line of support, right? There's more charts, guys, more patterns studied than there are actual physical books in the CIA library, okay? So trying to give you guys something like, okay, that's kind of valid. Yeah, 150,000 plus patterns. That's a lot of patterns to go through, guys. So the historical context is there. The empirical data that we approach this with is key. But the key, the facet here in the context of what type of an attitude do you need? First of all, we're framing things in the context of the risk exposure, right? In line with the probabilities, your expectations, like kind of like that foundation, right? Do you need the moonshot? Are you able to appropriately, let's say, gear your expectations as the foundation and walk into kind of a controllable situation where you're in control, right? What I'll say is this. As you look at a 62% chance, and this is where your strategy is going to start to come in, and I kind of want to cover this a little bit later, okay, in terms of your strategy. How do you strategize around a 62% chance likelihood, right? There are going to be levels and zones, I'm going to say, where you're going to probably, guys, you're going to trade the way you're going to trade it. And I can't speak for what your schedule is going to be, but in a potential low-level pickup, your attitude may be a bit different than in a flux zone here, where we approached that inverse head and shoulders a few days ago and looking at the probability of us reaching that upside maximum, okay? So you may have different zones that you start to, I would say, become more or less active in, All right, that's one approach that doesn't exactly deal with the attitude that you need to bring to the game in terms of being successful. And I wanted to let's say I went ahead and mentioned that, but I want to address with you all the level of competition that there is in the market. Okay, and the level of competition that there is in the market is rarely appreciated by the traders. Okay, we see it's like a Shaquille O'Neal dunk, or we see a grand slam at the end of a World Series, right? And we think, wow, that's the trade that I want. That's the trade that I want. The grand slam in the World Series. We'll go with this. We see the champion, the tennis racket thrown up in the air, and receiving the trophy. Or we see the Stanley Cup in the hockey and receiving all the guys up with the Stanley Cup. You don't realize that the champions are built literally one shot at a time. Literally the champion at the end of the year on the ice, on the guys from a tarmac to the parquet floor, right? For the Celtics to whomever it be. The champions are built literally one ace over the top with, the Federer or the Nadal. One, if it's tennis or whatever it may be, one Tiger Woods shot at a time. Literally one shot at a time. That there is neck and neck throughout this. That there was an actual overtime, right? That got them to the finals. Yeah, when you talk about a champion and they're holding up that's what I want. That's the shot. That's the trade I want. You need to realize, and in terms of the attitude, the most important thing, honestly, amidst the foundation and the other framework that I can bring you today, this is very important, guys. I hope you can really internalize this. This is for VIP. You guys know this. We don't need the dating. We appreciate the dating. That's great for VIP, but not here. I have to hide you from the channel. We got some comment in terms of dating. We don't need help with that. We're VIP, guys. In terms of this, though. Please understand the following. When you're looking at a champion and you want to emulate that in the market, in your life, whatever it may be, particularly in the market, you all are looking at becoming very successful, right? And I like this image of the Stanley Cup, them holding up the trophy, right? Or them cutting the nets down from the NBA. Yeah, right? Or the putting the Masters jacket on, boom, right, on the golf, right, whatever it may be. As we look at those championship frameworks in the market, I want you to appreciate, you have to appreciate, when you want to win and beat the market, there are so many times that it's literally overtime, and it has been neck and neck. And you don't appreciate it while you're trying to just win. And every day you wake up in the market, and you've got to wake up in the market, and you've got to say, I'm going to win, right? But you need to understand the champion is born literally. Sometimes it's down to one shot at a time. Literally, it's going to depend on that next shot with 2 seconds left, right? And that's the victory. That's the part you may have missed, not only in the championship game, but that everything that got that champion to that level, to that final, let's raise the trophy, let's cut the nets, right? Let's put on that Masters jacket, right, in golf, whatever it may be. And I just want you to realize how competitive it is. It is so competitive that the real champions in the market, and this in terms of bringing the attitude, like in terms of the stream, what it's geared towards tonight, I don't want you to get the impression, because we deal with a lot of 70 and 80% trades. We do. Right? We focus on, and I'm consistent about that. You guys know that. And we'll talk about the different zones. We'll talk about the different attitudes in the different zones as we look at different patterns. We'll go through that. But as we look at what a champion in the market is, you need to understand how ultra competitive it is. Yeah, and all of you that are doing well, and I know the ones that are doing well, and a lot of you are doing well in the markets, it's literally, guys, you and your ability to, like a championship golfer, or a pro hockey, or a windmill 360 dunk, bam, to close out the series and win the championship. I appreciate the fact, and I want you to appreciate the fact, that in day trading, it's not the show up on the fifth hole of the golf course once a year and schedule up on the par 3, and boom, I hit a hole in one. Hey, I hit a hole in one. I show up one day a year. You guys get it. I show up one day a year on the golf course, and I go up to the proper hole. It's a par 3, and bam, it's a hole in one. Hey, perfect. Guys, it's in the mud. It is, guys. It's in the elbows on the court in the championship game or in the playoffs, regional playoffs to get to the championship game. It's the sweat on the weekends. It's that constant drive, understanding. And when you look at like pro tennis comes to mind, guys, it just does. When I look at a tennis framework, because you see him drop a set. It's like, whoa, he dropped a set. He dropped the first set. But he's the champ. He's the champion. He's the champ. He dropped the first set. We don't know. It could be tight. We weren't expecting, let's say Nadal and Federer had a good matchup for a while. We weren't expecting Djokovic, right? We weren't expecting Djokovic to show up this week today. He dropped the first set. And to watch someone, a champ that you know is a champ, pull back in, and this is the attitude I want you guys to bring. To pull back into. We're watching the technicals, guys. We got a little bit of time. You know what's in play right now in Bitcoin. We have a 62% chance of returning to the flat top resistance. We know the probabilities. We'll talk about that in a little bit. But the champ is the Djokovic that can show up and lose the first set and somehow crack his neck out and sit there in front of the entire crowd of people and sit there and come back and maybe through neck and neck, even through the end. Boom, put him down again. Put Nadal down again, or whoever it may be as competition. In trading, you get the mentality. You guys know this. Even if you hate golf or tennis or whatever, you appreciate this. We talk about the Cowboys all day long, but we'll talk about that later, right? Football or soccer, right? It's the ability, literally, to drop the first set and show up the right way. And that takes so much focus, guys. You think it's easy, like Djokovic can do this. And there's no problem. He was the champ for so many years. He can do this again. Guys, that's when he turns on the focus. That's when he turns on the heat. That's when he's really, really, you guys know, from the physical to the mental, everything, all systems firing, laser focused, right? So I bring that up because we get the impression that it's the show up and the hole in one. I got to show up one day a year. I got to do my big trade. Guys, it's not the show up to get the Masters jacket, and that's for golf. In golf, you get a Masters jacket, a green Masters jacket when you beat the competition, right? You're a champion. You're recognized. You're you're in history then, right? But we get the impression with, and this is a very important, guys, very important just to take home kind of thought process, because we go through this daily as traders. You guys know this. And we want to show up even on the day, on every day, guys. We want to show up and we want to hit the hole in one. We just do. We don't. I showed up to trade today. Where's my hole in one? Right? I want to go to the right golf course. Guys, you know this. It's like I want to go to the right golf course. I'm going to go right up to the proper par 3, and I'm going to hit it. I'm going to get my hole in one. Guys, the market any day of the week will look at you as a champion. I'm going to tell you guys, I know this for a fact from some very good, aside from all the foundation we laid and everything else in terms of the appropriate approach to the market. It'll look at any champion. I'm going to tell you guys, it'll look at any champion in the market and say, okay, well, you're going to drop the first set. Bam. But I had an 80% chance. I knew this trade. I knew this crypto. I knew Bitcoin. It always moves like this. The market will challenge you any given day and remind you that you're not just invited to show up for your hole in one, your perfect trade party every day. You guys know that. And I want to bring into focus the amount of competition that you guys need to bring, the amount of focus you need to bring. And the differentiator between the real champion is the Djokovic, who can show up at Wimbledon, whatever in tennis. He can show up, he can drop the first set. He can be down on the second set. And literally something just engages with him, that laser focus comes on, and all of a sudden everyone's like, oh, that was a really nice hit. Consistency, discipline, boom, focus, everything. And then at the end of it, when he wins, like, man, can you believe he did that? And everyone's like, yeah, he's good at that. He can do that. And I bring that up because that level of competition that you expect in the market, you think, well, when I get good, I'm going to be good. I'm really going to be great. Right? I'm going to show up and hit those hole-in-ones every single day. Now, with our style of approach and you're booking positive trades. When I say I want you to show up and be able to book 4 positive trades, right? When I say that, I know a lot of you can do that, right? And you're figuring out the market more. You're figuring out how much it'll let you play with in terms of your margin. You get to a certain level and it's like, that always kicks back against me. It's too much. So that discipline that's fed in, but be able to be challenged. Understand it's a neck and neck race, right? It's literally, guys, I want you to realize how competitive things are and that it's not just a shoe-in, because we have a lot of patterns. And I'll just tell you this, guys. We had a VIP who left, okay? We had a VIP who left who's no longer in the group. He wanted the easy hole-in-one every day. I don't want to be around that kind of trader. I don't want to be around the group that just shows up and wants to cut the nets off the rim every day, guys. I don't want that. I want the traders who want to develop themselves, who are sophisticated, capable of being challenged, okay? Because what happens to the trader with the easy street? When we're not there, when you're not there, when something else happens, guys, to give them the right answer, otherwise, they're dead in the water, guys. They're completely dead in the water. Whereas the champion who's groomed himself, and you guys know this, to build back from an account that's been weathered a bit, but always have that, you guys know, before that were to occur, always have that discipline of heavy reserve cash. I've seen it in action. I have seen pros battle back at a level that you guys would say, are you kidding me? And it's the equivalent of Djokovic dropping the first set and a half, coming back and winning the championship. I've seen that firsthand from some extraordinarily capable, high-end guys, multinational level traders. I want you to have that mentality. Nothing can beat you. If you drop a set, you drop a trade, boom, you're right back in it. Never trade at a level that's going to get you hurt. Bottom line, that's going to take you out of the game completely ever. Guys, it's VIP, you know that. So in terms of the residual of the conversation here, let's go through a few details as we would look at it. And that's just my talk, guys, in terms of the attitude. Okay, in terms of the attitude to be brought to the game, it's that championship level, neck and neck, down to the wire. Every day, potentially, the market can do that to you every single day. I want you guys to be prepared. It's not the 5-second or the 10-second answer. I'm going to go to the next YouTube channel and find the answer. That guy who wants to do that's never going to find the answer, guys. He's never going to be a good trader. He's just not. You guys are at a different level, and I want to continue to, as much as I can coach and inspire you guys at that next level. I've seen it live, guys. I've seen it literally next to me or around me at big levels, and I just want to encourage you that that's more of what the game is about, with some of the other details I brought ahead of time. Never exposing yourself to the risk, never in terms of that. The 1,000 to 1 is a very good principle to remember. If something's in your favor, 1,000 to 1, maybe you want to hit it one time, right? Maybe you want to allocate some cash differently a little bit, and I'm going to hit this one time, right? As opposed to, well, I'm going to keep hitting that, and that excessive mindset, right, is just in terms of those excessive returns. And I've been there, guys. I've been there being disappointed with huge returns, and I still wanted a little more, right? Still just wanted a little more, right? So I've been in the same shoes, guys, and still challenged by those issues. But you guys help keep it in check, to be honest with that. So as we look at the details on Bitcoin, let's talk about a few issues. And we got to get into new HQ this weekend. Oh boy, we are moving again. Oh boy, that's gonna be nice, guys. Hey, why not? As we would look at your probabilities, one of the distinguishing factors that I see of big successful traders, and I want to bring this to you guys, and you need to appreciate this, is the following: they want to own the low. Okay, as simple as this sounds. They want to own the low, period. Now, we trade a lot. We flash trade every day, and it's a nice balance. I want to let you know, though, that there is a distinct preference, okay, a distinct preference for owning the low, period, right? And in terms of the amount of time we go through 100 rounds, we are very aggressive in terms of generating volume, okay? But I want you, and I've mentioned this a few times in the back, all right? The difference between owning a low and the potential for owning the low, okay? And while you're dealing with every pattern you're dealing with, this question, it's hugely important. Hugely important, right? Now you can deal with it on the micro or on the macro, okay? You can deal with it literally looking at the daily chart or the 4-hourly chart. And when I say it's a differentiator, guys, consistently, not just looking for the next trade, can I get the low? Is this next entry for me potentially the low? For what period of time? For just this pattern on the macro overall, there is an appreciation, so that you know, between the larger traders that I've been around for whether or not the next move could be the low, not a low, the low of the pattern that you're dealing with, projecting and forecasting into the pattern that you're dealing with. Very important, crucially important. We don't talk about this enough, right? But as we would look at, what did we have here? We had the descending triangulation, right? This is a great example. As you trade, and this will be the first pattern that we trade and go through this issue, as you look at the descending triangulation, okay? This is a pattern, and we have to go to the candle wicks. You guys remember this, okay? On the candle wicks, as we look at a descending triangulation, traders will look at this bottom line pickup zone as potentially, and with the possibility of a descending triangulation turning into a 1-2 triple bottom, potentially at any point in time. Understand this is a pattern where traders will look at potentially owning the low, period, because of the double bottom or the triple bottom dynamic. But even within the function of, aside from that, within the function, understand there's that on the macro, potential double or triple bottom on the macro, right, the big picture, or even within the context of the specified pattern framework, whether it be on the 4-hourly, if we were to condense this and be on the 5-minute, it would still be relevant, right? Because we're going from, let's say, the macro to the micro, saying, okay, this could be the low in the pattern, right? Which could either reverse on a micro level or on a macro level. So I encourage you the following. When you're looking at your entries, and guys here, don't get thrown away with FOMO, very easy, fear of missed opportunities, right? Don't be moving or shaken from your strategy. Never get careless, lazy with, well, I've missed this low, right? Great, let's wait for another low. You're going to get another low. Is it the low, right? And we have such an all-in mentality. You guys know this, even from Bloomberg. Guys, we listen to Bloomberg all the time. Bloomberg is continually on this all-in mission every day. You guys, I don't know if you really recognize that. What they feed you is an all-in kind of approach, right? It's either the extreme this way, or is it really going all that way? We want a low. We want a low. We'll consider whether or not it is the low. We will always look at a lower opportunity. And I just say this because the bigger traders that I've been around some guys, some huge traders, had the ability to trade with them. It's nice. Okay, it just is what it is. And a lot of you guys are not small fries, guys. VIP, you guys know this. In terms of the look and the feel of what a bigger trader is looking for, not, oh, a whale just moved. And guys, I can't stand these little commentaries of, oh, a whale just moved, such and so many out or into an exchange. Forget about it, guys. Forget about it. Focus on your technicals. Focus on the real game in front of you in terms of your approach, your trades. What's your next trade? Right? Where's your next accumulation zone if you're going to accumulate long term? Or where's your next potential bottom? Is there a low coming in? Could it be the low? And as you frame that, I wanted to cover that today. It was one of the things that came to me that I haven't discussed as frequently as potentially necessary with you guys, to let you frame both within the pattern construct that you're immediately looking at, that pattern that we're immediately looking at. The descending triangle is always going to present you some opportunities to say this could be the low, right? At least it's a low of the pattern along the bottom line support, but it could be the low if it wanted to traject to the upside. Now, that's not said at all to get you more excited about getting into a position right now. It could be the low of Bitcoin. Not at all. Remove that component from your thinking, guys. Remove that component from your thinking. We will have another opportunity on the hourly to buy in. Guys, we'll have another opportunity always, guys. On the 4 hourly, it's Bitcoin. We'll get a dump on the 4 hourly. We'll get another dump on the daily. in terms of those opportunities as they present themselves, you'll see another red day. You guys know there's a real red day. Never, especially with Bitcoin, it's so volatile. We love it for this reason. But we always know, and we trade enough, and you guys know this, it's going to be another hourly opportunity. Yeah, we'll hit it happens with the RSI all the time. The 4-hourly RSI will hit into, we're talking about attitude, guys. So the 4-hourly RSI will hit into oversold, all right? And we're like, well, it's time to buy. And it might go lower, right? But the thing that happens once it turns to the upside, I know it's that remorse of every trader who's like, I didn't do it. And as it's going to the upside, price is moving to the upside, you're thinking, I won't be able to get back into another 4-hourly opportunity like that. And what happens all the time? Every time, what happens? You get another opportunity to get in at the 4-hourly, and then you ask the same questions you did when it hit in the time before. You know this. Well, maybe it's going to double hit into the. You'll do it again, right? So the solution here is that the market will continue to present you with challenges until you master them. That's what VIP is all about. Whether or not it's that 1,000 to 1 ratio, and if you're just tuning in, make sure that you re-listen. It's been a great attitude specific stream. It really has. We've covered a lot of good information. I hope that you're able to listen to it. If mic was off or anything else was off in terms of the sound, we'll actually redo it so that this comes through clearly, because a lot of what we discussed today is hugely important. I will actually point some newer traders towards this video and some of the content herein. I'll try and refine it, but there are some issues that I just wanted to cover with you guys today. All right, in terms of probabilities, in terms of, and one thing is that in terms of the proper approach on your probabilities, right? That extremely favorable trade, maybe you don't want to trade it all the time. If it's really a critical, let's say if you're at a critical level of risk exposure, and it's a good way to think about things, because you think on 1,000 to 1 trade, there is no risk, right? Well, it becomes very risky if you have the wrong level of capital exposure and you continue to repeat that trade. Worst thing you can do, have 1,000 to 1, let's say you have 1,000 to 1 odds of winning your trade. Beautiful, and you guys understand, those are big odds, right? 1,000 to 1, I'm gonna win. The worst thing you could do is involve too much cash in that trade and say, I'm gonna trade it 1,000 times. Excuse me? Right? You don't want to build into an absolute guaranteed disaster, which you can do literally with 1,000 to 1 odds in your favor, right? So be careful of that. Think rationally. We want to be the group, and we are the group in terms of heavy cash reserves, looking at your risk profile. We do it all the time as we look at like a 62% chance. And guys, at 62%, we don't need to forgive it or otherwise, but looking at a 62% chance of a return to a preceding flat top resistance. Some people will say, well, I'm going to short. Bottom line, and you guys know these are very tricky in terms of Bitcoin. You never really want to be left out of a nice short back to a flat top resistance. You don't want to lose, this is it, guys, and you know the decisions you make, you don't want to lose the move you just got to the upside, right? You're figuring there's typically going to be some short in this area. What I do, however, if you're going to get all the way back to flat top resistance, it's always that nagging question, will Bitcoin just leave this one behind? 62% chance that it's going to return, so 38% chance of it leaving you behind. As you look at your trades, okay, being lightly involved, measuring your risk dynamics and let's say your risk, measuring your risk appropriately in terms of both your amount of your trades and the trades in which you choose to be involved, right? Those selected trades, be selective in your trades, you have to be. But as you gauge and measure in your participation, what I don't want to see you guys do, I was talking with a VIP last week about this, is almost it's the all or nothing syndrome. It's the double my money at the roulette table, and I'm bringing this much money, and if I can just double it every time, I'll get to where I want to get. Guys, not in the market, not with real money, okay? The trick is the measured level of involvement, the measured level or exposure to risk, right? That minimized participation in the market with your higher probabilities. And also, guys, I'm gonna say this because we love the 70 to 80% probabilities, right? But I love when I see a trader who is trading like 1% of his account. After he becomes successful, in terms of consistency, he's still just trading 1% of his account. Guys, those two things go together frequently. Still just trading maybe 5% of an account, and he has multiple accounts, okay? Watching traders grow their accounts that way is a beautiful thing to experience from my end, guys. It shows an incredible amount of discipline and respect for the markets, and it categorizes you wonderfully with the exchanges. You're not on a radar. If you have a large account and several large accounts, and you're just working on your consistency and slowly building cash into increasing that account, it's a beautiful way to be. Strive to be like that. If you want to strive to be other than that, you go for it. You let me know how it works out. I see a lot of success from people who are very, not guarded or shielded, but very respectful of their participation in the markets, right? They see it as a long-term solution, not a quick-term solution, right? So as we would look at the issue I just brought up in terms of, and this is hugely important, do you own the low, right? If you potentially own the low on any stock, on anything, guys, that you would look at, and you guys know not financial advice. I don't talk about securities frequently, guys. We just talk about Bitcoin. It's not a security. We like that. But looking at the level of support here, and what do we have? Scotland, my man. What's up, Scotland? Hey, my man, Scotland. Nice to see you, brother. Scotland in the house. My man, VIP in the house. Scotland, I'm excited you're here. It's a good guy. Scotland Leon's from Scotland. He's top-notch VIP. So glad you made it, brother. So as we look at genuinely glad you made it, brother. I'm sorry for the time difference. As I'm in California, it's what time is it? It's 9:15 p.m. here in California. So it's yeah, we're way off on time. In terms of this, looking at and there is this notion of compounding your risk. Let's talk about it, guys. Compounding your risk. How do you minimize your risk? Okay. It's the difference, and it is, guys. It's the trader who wants to go in at the 1,000-to-1 trade that's in his favor. He's going to have critical amounts of capital involved because it's such an attractive trade. It's an awful setup if you think about it. He'll have critical amounts of money involved because he knows he's going to win. It's 1,000-to-1, but he can't help himself from trading it 1,000 times, right? Wherein he's guaranteeing himself a catastrophic loss. Right? So 1,000-to-1 in his favor, he can't help but trade with that huge amount in his trade. It's just guaranteed almost, but he just can't help from trading it 1,000 times. It's 1,000-to-1. I'm the guy there. It's 1,000-to-1. It's a one gonna get you, right? So it's compounding your risk, okay? Compounding your risk. You understand that? As we look at participation in trades that are 60 to 75%, once we get through that threshold of which direction things are going, a lot of times we can participate on an 80% plus, right? Sometimes we can participate 80% plus in terms of what's the expected move, what's the expected target. You guys know that. I know you're paying attention to those issues, and that's very specific. I mean, that's very, very specific know-how. It's very specific to this group that we focus on issues like that. But as we discuss, do you own a low or do you potentially own the low? If you're in a position, and the descending triangle is an easier pattern to come up with and at least frame the question as to whether or not you might own the low, at least of the pattern, right? At least of the pattern, right? If you're looking at a descending triangulation, you would expect hits along a level of support. You have to go to the candle wicks on Bitcoin. And you would expect a decreasing line of resistance. The descending triangle, this is important, is the type of pattern, it is the pattern, where you can expect to pick up at and with some flex in it, right? This had a little bit more flex than what was comfortable. Expect that with Bitcoin, expect that in the market, right? It really pushed down and through here. We caught on the 5-minute, we did have a bullish pattern. Beautifully well done. Hey, what's up, guys? Way to go. Now, in terms of this flat bottom support, though, understand the following. If you're in the descending triangulation, you understand that there's an expectation of your moving, hopefully, back to the level of resistance, right? So you also understand that as you, let's say, as you want to increase your trading activity, even if it's at a 75% chance, even if you say between the support level and the resistance level, I'm going to be disciplined. I'm only going to involve myself in 70 to 75% probability trades. Okay, you can do that. You can say I'm going to limit my trades between support and resistance to only trades that are 75% likely. Okay, now I'll just tell you, as you step into the framework, and I love this, guys, is the quintessential lesson here is there's a trade that's 1,000 to 1 in your favor, right? And it's the guy who just can't help it. He's going to trade massive amount of cash and a critical amount of cash, and dang it, he's going to keep trading it for 1,000 times. He doesn't quite realize, like, hey, guy, it's 1,000 to 1. One of those is going to get you, right? So as you look at compounding your risk, you need to realize that when you're in a very favorable position on a given pattern, let's say a descending triangulation, and you have the low of the pattern, we don't know macro yet, guys. We can't say what's going to happen with FTX. We're seeing a lot of bullish activity within a bearish pattern with the contraindication on the wicks of the descending channel, right? There's a lot in flux, guys, typically is, as we look at the market. What I'm going to say, though, as you participate in a multiplicity of trades, even at a 70 or 80% probability, okay, now you can do well doing that. But you can also, if you're this guy, let's say the guy over with the 1,000 to 1 scenario, and he has to involve critical cash, and he's going to give up his position, right? If you give up your position, which was the low of the pattern, and you're going to compound in your risk, you're probably at some point going to wish you hadn't done that. Now, you'll get good enough to where you can, if you work at it, guys, you'll get good enough to where you can deal with that issue and kind of rewind it a bit if you get bit on a pattern or two, because you're going to have, well, that was a 70%, 75% trade. Let's say this pennant here got a little tricky though, right? Let's say it hit your stop loss. Dang it. Right? There is some form and function, some strategy and skill set behind trading, and you guys know this, behind trading a 75% pattern that's in your favor, or let's say a 75% pattern that's in your favor, you still got to trade it right. You guys know this. You still got to not hit that stop loss. And the exchanges are tricky enough. You guys know this. So when you're in a special circumstance and you own potentially the low of a pattern, and you can balance out, and let's say you get a little bit of a gift and you say, well, I really didn't see this coming in, but now not only do we have a descending triangulation, but we also have this, let's say this expansion, and we also have a descending, look at this, so we have a descending channel, downward sloping channel, which is by design going to typically be a bullish pattern. So at least you have a framework to look at least you have a notion to say, I may just want to let my profits run. Now I can afford, because I own the low in the pattern, this thing could reverse. There are two other accompanying patterns. And I may be in a position where the low, in terms of your risk, you don't really need to compound it. Now, aside from that position, if you want to call that kind of like a security position, right? You call it what you want to, but if you want to call that kind of like a security position, boom, I've got that security position. I have the low. Man, throw at the other trades. Enjoy it, relax, work with your probabilities, especially if you're already consistent in it. But again, never with that critical amount of cash. And I would just always, guys, suggest that even at the low, you don't involve yourself with a critical amount of cash. Guys, in the markets, you just can barely afford to do that. Some people can. But I just tell you, it's typically the person that is trading those 1,000 to 1 in their favor style trades. Guys, there are 1,000 to 1 trades in your favor. Right? And what would you do? Immediately, and I tell people sometimes, you guys, maybe you don't know me well enough, because I tell people who want the sure thing, I explain it to them, and it's very interesting, because I'll go through, they'll want to know what's going to go on in the market. They want to know, is it going up or is it going down? Right? They ask me, it's like, I asked them, I said, would you really want to know for sure? And I asked them that, would you really want to know for sure where it's going? And I say that because if they absolutely know for sure where something is going, that person's down at the bank making withdrawals and potentially loan applications. Hello? Yes, potentially loan applications, because they know for sure where something is going. And so I ask them, they don't appreciate it or receive it correctly. But when we're looking at, when someone will ask me, just so you guys know me a little bit better and how I engage with people, they'll ask me like, well, London, is it definitely, is it going up? And I say to them, would you really want to know? Because you'd probably be down at the bank, or otherwise if I really told you the answer. And from my standpoint, I'm interested in that person's time, so that you know how I roll, guys, who I am. I'm interested in that person's quality of life. I'm interested in the fact of whether or not there's an actual Thanksgiving or a holiday, a Ramadan, whatever it may be, from Christmas to, whatever it may be going on, whichever religion, or is there a family event? And that's how I get with them, because literally sometimes them knowing, right, and this is how I am, but sometimes them knowing, as I talk about the right attitude to bring to the game, I see people that go down to the bank, they want another loan, they want to bring out this, it's like, would you really want to know? So as you look at compounding your risk, as you look at that all-in, that ultra-aggressive style, can you back off of it? Can you allow your account to grow the right way? Can you appreciate how competitive the market is? That championship, hold up the Stanley Cup, right? The World Cup's on right now. You guys see all the sweat and the hustle that's going into the World Cup? I mean, come on, guys. It's not that show up and lights out, grand slam, home run, everything's, a 2-second, you guys match and it's over, and 1-second punch knockout, hey, I'm the champ. It's rarely like that in the market. It's the discipline, it's the hard work, it's the everyday kind of practice that builds you into a champion. And I just wanted to bring you guys that message today, because I don't think I've ever really heard it in that context. It's the Djokovic that dropped the first set and has to laser focus, bring in all of his talent, and bring it in front of the whole community, the whole crowd, the whole world who just saw him lose. And he's still going to just with the tennis ball, and I'm back, and that guy's going to win. Boom, right? So amidst all the challenges you go through, I don't want you to see it as as anything less than a phenomenal challenge to you who can do this. And I'm really, guys, I couldn't be more excited about the trade group that we have, the level of skill that you're developing and who you're turning into. And I know a lot of people that would love to be in a group where a number of you could and maybe have decided, yes, this is just what I do. This is what I do with my time. That's beautiful, guys. You're not off at a prop shop, prop trading. It's okay, guys. Prop trading, huh? Well, you get funded. You get a certain percentage. They get a cut, and it's like, okay, well, that's all right. But I like your style. I'm going to say that to you guys. I like your style in terms of the group that we have and everything else. We'll be growing in 2022 and beyond. And what we're growing is in line with this message today. I hope if you didn't catch all of it, that you can rewind and capture some of it. We'll go through some of the issues, and on the technical issues, we will cover them more in detail. But just understand what it takes to be a champion, okay? It is that neck and neck, all right? It is that down to the wire to even get into the playoffs, right? To even pass through the second round, to get into the championship, to get into the 7th game, down to the last 2 seconds. Man, and looking at the team and saying, can you believe how hard they worked to win that championship, right? That's what I want you guys to have, is that mentality of trading. It's that neck and neck the whole time. You may drop the first set like Djokovic on the World Championship stage of Wimbledon, but watch him come back, right? It's that level of competitiveness that people don't normally appreciate, because, well, everything's supposed to be easy. You show up and it's the Masters golf tournament and bam, there's my hole-in-one and I win. No, guys, it's a lot of focus. It's a lot of discipline. And across the board, guys, I'm going to hold this book up because you know where it's at. This is at least the perfect start, guys. And this is actually the perfect start. This is technical analysis of the futures market. All right, this is Murphy's first book. Now, most of the book is repeated in New York Institute of Finance, all right? New York Institute of Finance, the book that we focus on, technical analysis of the financial markets. This is technical analysis of the futures markets. All right, we trade futures. Maybe pick up a copy of this book just to have it around to look through some of the dynamics. There's some good work on cycles, right? I think you'll find some good information on cycles. That's also repeated. I'm covering this specifically for a specific VIP, but Looking at the cycles, international battles. You guys see this? Look at this. International battles, right? Worldwide international battles. Just like clockwork, right? Over the centuries. Literally over the centuries. Literally just perfectly crafted, nearly perfectly crafted in terms of battles, international battles. So this is the type of framework that you need to that you need to build your foundation on and your mentality on when you're looking at becoming a day trader. You need to put it in context. It's not just the sunrise, the sunset, the moon goes through its cycles. It's battles, right? It's solar flares and activity. It's literally knowing the componentry behind the market, guys, that I just want to make you guys champions. We build $1 million champs. And we're going to build a lot of them, guys. We're going to build a lot of them. If you want to be one of them, you've got to re-listen to this stream if you didn't hear it all. We'll work on the sound and audio, redo it if need be. You guys just wanted to bring a good stream. This is London.